Everybody, my name is Rohit Sharma. I'm here to talk about Simple Invest. It's a cloud-based tool that automates asset allocation management, an exciting opportunity in the personal finance space. This is the agenda that I'll be talking about today. Meet Joe. Joe is an investor who has greater than $50,000 in investable assets, and he understands that his investment success is linked to diversification. An effective diversification is achieved by having an asset allocation and rebalance strategy. Investing is all about discipline. Asset allocation makes sure that he has his risk profile balanced out, and rebalancing ensures that that risk profile is constant through his time horizon. In order to have an effective asset allocation and rebalance strategy, Joe has to answer a couple of questions. There are a couple of tasks that he has to go do. First off, what is his asset allocation model? Is he sufficiently diversified? Once he has his model, how is his model tracking through time? When and how should he rebalance? And other summary statistics such as what's my total return, what's my country exposure, etc. Joe, however, today lives in a very complicated investment landscape. Like many of us, he's had multiple employers. He has a 401k with his current employer, probably a 401k or has a 401k with his previous employer that he's rolled into an IRA. He's saving for his kids' education in a Vanguard family fund account. He probably has employee stock options. He probably has employee stock in another brokerage account. His wife probably has an IRA as well. In addition, in each of these accounts, he has a multitude of products to choose from. He can have mutual funds, ETFs, stocks, bonds. There are a lot of asset classes out there. With that investment backdrop, the task for asset allocation and management that Joe has to do is now time-consuming and complex. This is Joe's pain point. A solution that automates it and makes it easy for him is Joe's need. So in comes Simple Invest. How does Simple Invest solve this problem? Simple Invest is a cloud-based solution that automates the most complicated parts of asset allocation management. So how does it work? Joe logs into the website, he gives us his credentials for his various accounts, and we seamlessly connect to all the accounts and gather his disparate portfolio holdings. And through our proprietary algorithm, auto-tag that and give his complete asset allocation picture across all his accounts. Joe now gets to see what his allocation is across all accounts, not just one of his accounts. Once that asset allocation model is created, Joe can now look at that asset allocation model and say this is what he wants as a reference model, or he can adjust that to tweak to make a reference allocation model. Once a reference allocation model is done, Simple Invest will then continuously monitor his portfolio values and compare it to his reference model. If the market values diverge, that is now his portfolio is out of balance, it will inform Joe saying, hey, your portfolio is out of balance, you should probably rebalance at this point. Not only that, now that we know that his portfolio is out of balance and we have all his transactions, we can actually tell him the trades that he needs to execute in order to rebalance. For example, sell the high yield bond fund in his 401k account that he has from his current employer and maybe load up on equities in his Vanguard family fund account. This greatly reduces the complexity that Joe has. All he has to do is execute the transaction. In addition, again, since we have the transaction data and we have the cost basis, we can actually structure these trades in a tax efficient way as well. For example, selling low cost holdings first, long-term holdings first and then short-term. This is the core module for Simple Invest and it greatly simplifies Joe's rebalancing activities. In addition to those, we will also offer diversification-focused analytics. Country exposure being the first one of those. Across all his accounts, what is his exposure by country? For example, the way Joe can use this is Joe reads about Greece in the news and says, hey, there's some problem with Greece. He can use our tool now to pinpoint exactly which of his investments is exposure to Greece and decide whether he wants to keep them or he wants to liquidate them. But now he actually has a clear picture, country by country, on where his investments across all his accounts have exposure to. In addition, we also have industry exposure and other summary statistics such as total return, what's his beta, what are his contributions. Not only just what his net worth is, but how much money did he put in and what is his actual investment return. In addition to the core asset allocation features, Simple Invest will also have social and community features. We will have unique content focused on asset allocation that enables Joe to keep abreast of the latest in asset allocation strategies. Simple Invest will also allow Joe to very easily share his asset allocation model with other users in the Simple Invest community. This enables Joe, and it actually gives him a unique advantage and an ability to look at data from other users and how other investors just like him are positioning their portfolios and their allocation models. So now Joe can make his decisions based on real data rather than some anecdote that he reads in a magazine or in a financial magazine. In addition, these social features also have the added benefit of increasing user engagement and network effects for our product. So that's kind of the solution summary for Simple Invest. Moving on, go ahead, sir.
So I'm a little ignorant on this, but how do you get access to all that, all those systems to get all the data?
So there's a protocol called OFX that most of the financial institutions support, or you can write your own custom parser that can web scrape and get data as well. There are other API providers such as Yodel, and I think Morningstar also has an equity API, but there's a publicly available API as well, and Yodel, after they were the engine that Mint.com used, their pricing is pretty exorbitant now, so it's probably better to just use the public APIs.
So they're providing you private data about these users. Like, so for instance, Joe comes on and he will be able to get his accurate information for every single one of those accounts.
Yes, he will provide his credentials so we can use that to connect to his investment account and get that data. And there's a specified protocol for that already.
Question.
Yes.
Awesome job communicating the problem. We on the judges panel we all understand the asset allocation problem. Do you think the majority of the masses are aware of this problem without an MBA education and understand that this is something that they need to go after?
Yes. So from the target market of 100,000 to a million investable assets, there seems to be a very high awareness of asset allocation. I did some primary researches, and I can get to that in a couple of slides. But in my understanding, asset allocation and its benefits seem to be very well known from a diversification standpoint. What seems to be the problem is the whole mechanism of how to actually rebalance across multiple accounts and do that accurately and in a timely manner is really time consuming. That's where consumers are like, okay, I don't want to deal with this. At least that's the research that's led me.
I've got a question. So, I mean, if the ability to scrape kind of data and pull info from all these other accounts is publicly available, anybody can do that, right?
Yes.
What are you offering? You're offering recommendations based on what you see. I mean, tell me what you're offering and how you're different and how no one else could do this.
So what I'm offering really is the rebalancing algorithms and the transactions that algorithm will print out in a tax efficient manner.
But so your algorithm is proprietary.
Yes.
But I mean, essentially, any of these other major firms could create their own algorithms.
And I kind of walk you through the computation of where they are as well. But
Sure.
the first piece of going and collecting is kind of a prerequisite. That's not the core feature, but we can kind of get around it because in terms of asset allocation, you are looking for long-term growth, not just what your current state is. But that's almost a must-have now in order to even develop any aggregate statistics on portfolios. So that wouldn't be the core feature, but that's almost a necessary feature that you have to pick.
Yeah.
So moving to the addressable market, using mutual fund investors as a proxy for the amount of personal investors in the U.S. There are about 90 million individual investors, mutual fund investors in the U.S. that represent about 56% of U.S. households. There are about 3.3 million additional on top of that are invested in ETFs. So approximately the universe of personal investors is about 100 million. I've excluded high net worth individuals. Those are individuals about $1 million in investable assets because that's not part of my target market. Target market is 100K to $1 million. So that leads us to about 96 million individual investors in the US today, growing healthy at a 0.75 to 1% rate. In terms of what about the complexity that Joe faces? We talked about the multiple accounts that he has and the multiple investment products that he has. There's about 7,500 mutual fund options available today to an individual investor, about 923 ETFs and growing. And there are about 4,500 broker dealers. That's 4,500 places where Joe can have his investment accounts. So his investment world is indeed complex. To dig a little bit deep, go ahead.
No, next slide. Maybe you're going to cover it. I'm just looking, number of accounts per person. There it is, right in the center. Okay.
Yes, so that was just primary research on the number of investors.
Mm-hmm.
And then I did, to dig deeper, I did primary research, sent out a survey, 149 investors responded. Also did speak to 10 investors on top of that in person. And these are kind of the results. About 76% of the respondents had difficulty in rebalancing. 49% of those had greater than 2 investment accounts, and a large number of them, 84%, were aware of asset allocation and its benefits. In addition, they also gave us indication on what are the features that we need to implement in order to satisfy their needs. And that's analytics, education, the kind of solution set that we came to. So based on the primary and the secondary research, the market is large, and there is a genuine pain point, and Simple Invest, if we make these features, will solve that need. So moving on to our business model. Our survey indicated a $120 a year price point, so we modeled our revenue on that. It's a software as a service model. In addition to the primary business model, there are a couple of secondary business models as well. One of them is being advertising. First, targeted personal finance sites such as ours typically have a $8 to $12 CPM, and I've modeled the revenue at a $10 CPM. At some stage in his life cycle, Joe is going to need the high-touch services of a financial advisor, especially for estate planning as well as life insurance. These are things that we cannot automate, so we could serve as a referral source for the financial advisors. And I've modeled that at $200 per lead for those financial advisors. They'll be paying us, and at a 4% conversion rate from our user base. In the future, as we grow and we get a lot of users and we get a lot of portfolios being tracked, we have a lot of aggregate data now on investor behavior. We have avenues to productize that data. One of the avenues would be to give product providers such as Fidelity and Schwab unique insights and aggregate trends into what our community is thinking, and also provide them a opportunity to pre-test their products with our users. So those are productization for future productization avenues. With that business model, this is kind of how our user growth and our revenue projections look like. For 2012, we'll be in development mode. We're expecting to get about 5 beta users at the end of the year. And then we roughly expect to end up at 225K users at 2021.
Do your beta users pay?
5 beta users unpaid.
Well, I'll make it 6.
There you go, perfect. So we have a 6 paid user maybe?
Hell no.
$120, I'm sure.
Let's see how this thing works.
I think that leads to an interesting question. Why not go to more of a freemium model here? Why right off the bat? Mint is a pretty good comp here for this. Obviously, they don't charge at all. There's a lot when you're going for this mid-market segment that I think there's going to be a lot of people on the margin, whether they find value in this or not. It seems like an easy thing to verge it, rebalancing versus not rebalancing, or some of the other features.
Correct. So my strategy was to price it out first as a software as a service, and then as a defensive move, if another provider comes in, and we talk about in the competition on why they're not doing it, especially why Mint is not doing, or maybe has model challenges on why they couldn't get here. And if such a competitor agrees, then kind of implement the freemium model as a defensive mechanism. Because based on talking to investors and just by doing a raw calculation on the amount of time it takes an investor to do 2 spreadsheets, we're way cheaper. It's about a $480 hit if you just value somebody's time at $15 an hour versus I'm $120. So I think there's easy demonstrable ways to show value for that $120. But the freemium is correct, and that's more, I'm positioning it as a defensive move rather than trying to use that as a front strategy to come straight in.
You can always go down, right?
Exactly, but I don't want to start from there in some
Yeah.
sense. So this puts us at a 34 million gross revenue at 2021 based on the projection. So sales and marketing, how are we going to get Joe to our site? Right, we need to attract him to our site. So in our launch phase, we're going to obviously focus on online marketing. We're going to have unique content that's focused on asset allocation. That's our core focus. And we're going to use that content and partner with other personal finance blog networks such as StockTwits, Seeking Alpha. And there's also offline communities that are focused on investing for the mid-market crowd. That's the American Institute of Individual Investors, and use that as a way to drive users into our solution. There are other forums such as Bogleheads, etc., which are also focused on asset allocation and have a good user base. We're going to use that to drive the content that we write focused on asset allocation to drive users to our site. We'll do direct email a little bit. We'll experiment with SEM to figure out what our strategy is going to be. And as we grow, we'll expand our partnership opportunities. We will expand our SEM, And we will also use an enterprise sales approach to repurpose, or not repurpose, purpose our solution as an investment wellness checkup, very similar to the health wellness checkup that every company deploys today. It kind of gives you, hey, these are your wellness numbers. Use the same value proposition to say, hey, companies can provide this software to their employees as a benefit, and saying it's a financial wellness checkup for you. With that, the company pays us revenue. We also manage to get a large number of users in one go.
So question, I mean, given the financial products that can be sold, I have to imagine asset allocation is a highly competitive term. Who are the top three right now in that space?
So from an asset allocation, in the top three are, the first one is Trimedra, which is actually focused only on the advisor market. And then Morningstar does a little bit of asset allocation, but they're more focused on the research side. There's really not a single competitor in the personal finance space that is focusing on asset allocation and rebalancing. They're only focusing on, most of the financial software providers are focused either on two things. They're either trying to be a low-cost financial advisor themselves, which means they're just trying to get all assets into their platform. They manage everything, but that doesn't work well if you have assets spread all over the place. Or they're trying to be enhanced portfolio trackers, which is just, let me track what you have and give you a current static allocation and tell you your net worth, etc., with a limited amount of analytics. But they're not going to the next level, which the consumer really needs is, I get it, what's my current allocation? But this is the model that I want to be, because that's my risk. And when I go off that model, how do I rebalance? And there isn't really, it's a software problem that can be solved. That isn't one that's focused at our market at this point. I hope that answers your question. Competitors are a good place to go from this slide. So we have a couple of major competitors, and these are how they stack up. First up are spreadsheets. Spreadsheets are manual. That's primarily what investors use. It takes a lot of time, no analytics. We're way better than that. We're offering automated with analytics. We're saving time for the consumer. Financial advisors. They're expensive and overkill just for asset allocation and rebalancing. They typically have high minimums, and they charge about 100 to 150 basis points. And in today's low return environment, that matters. They also suffer from agency issues. They're compensated by the huge sell-side financial industry. Are you sure they're giving Joe the right advice? Simple Invest has a flat pricing structure. We're not charging you a percentage of your assets. Our job is to give you the tools to manage your asset allocation and rebalancing activities, make it really simple. You, the investor, are in control. You decide what you want to do. We're just giving the tools for you to make it really easy. So we don't suffer from any agency issues. Product providers such as Schwab and Fidelity are other competitors. They are walled gardens. They have great features if you buy their products and are on their platform. But they don't give you the same set of features if you go to other providers and other platforms, because they're monetizing the product. They're really not monetizing the features on top of the product. This is a choice that Joe might not have. It basically means that he has to have all his eggs in one basket. That means he's got to go to Fidelity. A choice he might not have, a choice he might not want to do. Simple Invest. We support multiple providers. We're provider agnostic. We give you the features across all accounts. That's our core value proposition.
Have you thought about incorporating home equity values, because a lot of
Yes.
a lot of the majority of the American assets are in home equity,
Correct.
and stuff like spreadsheets and advisors kind of have the implicit advantage of taking care of it, right?
So in the asset allocation model, one of the asset classes will be equity, and the way to do that would be I'll have your mortgage information, and I can go to Trulia and find out your real house value, and I can subtract and tell you what your equity is.
Awesome.
So that will be part of the asset allocation model as well. So the model will take care of stocks, bonds, stocks, equities, and not only just stocks, but individual low yield, high yield. What are the different types of slices that you can make, and or real estate as well. Good question. Financial software. There are a lot of providers. There are a lot of competitors in the financial software space, but most of them are not focused. Actually, all of them are not focused on asset allocation and rebalancing. That's our core focus. That's where Simple Invest succeeds. And to dig a little bit deeper, this is the list of some of the major competitors from the software space for Simple Invest. As you can see, Simple Invest is well positioned against all these providers. Again, if you see, none of them really do have a focus at the rebalancer and the tax efficiency. All of them are either trying to be a low-cost financial advisor because they're trying to go to that market, or they're trying to be enhanced portfolio trackers, which really doesn't solve the problem. It only tells me what my current allocation is. It doesn't let me choose what my allocation should be and how do I maintain that allocation over time. So that's where Simple Invest comes in, and we are uniquely positioned there.
So, hold on.
Yeah, we need to go back.
Yeah.
Spend some time.
This is,
It's an
yeah,
eye chart, I apologize.
this is an important slide. So you made, if I heard you correctly, you made a comment back that said Mint.com can't do this.
Yes, actually, Mint is a good example that I can
Why
go through.
can't they?
So Mint, if you look back and see their business model, their whole business model is based on referrals. They analyze your fees and they want you to switch to a low fee provider. The whole business model with asset allocation investments is, that's really not the model. You really can't just look at fees and say, hey, you can switch to another low fee provider. Because that's not really what the investor is looking for, because there are implicit transaction costs as well in really switching to another provider. So Mint's whole idea is switching and getting revenue from referrals. So they could go and do this. They have a head start in at least the account aggregation. But they've got to build out the analytics, they've got to build out the asset allocation and rebalancing, and they have to build out the tax efficiency algorithms. How are they going to make money off that? They'd have to go charge and do a subscription as a service, would be my bet. Now their whole business model is free and we get money through referrals and advertising, and now they're going to have this bolt-on piece that they'll have to ask money for, which they have to build out anyway. So in that sense, there's a core business model issue with the way Mint operates today, and there's not an easy way to reconcile this feature set with their current business model. So they could take the leap and do a whole new site and do the same thing again, which makes their odds, as I hope, equal as mine. So I'm going to take a shot. I hope that answers your question.
Yes, good job.
Okay. What were the top two things that your market validation study that they asked for?
They asked for, give me the full picture across all my accounts and help me rebalance in a tax efficient manner.
Right. Okay. What was the least? What was the bottom?
Automatic rebalancing.
Wasn't social features, or did I read it wrong?
Yeah.
Oh, from that?
Yeah,
Yes, from,
the bar chart.
I can
What
go
I'm
back.
getting at is that why the social features? Why?
The social features are primarily for user engagement for us as well, right? We want customers to start sharing and building a community because that increases our network effects as well. And users will get value from that data. It was low on that list, but they were all about 70%. The one for rebalancing was 50%. So I didn't even put it on there.
Okay, so, all right. You want referrals from the social media stuff, okay?
Yes.
Why not just have the ability to say, hey, you just saved, on your taxes this amount of money. If you're happy with that, click on this button and post something nice about us on Twitter or Facebook.
That's one.
Why spend all the dev dollars? Because I'm seeing a big mark here, red mark on the social features. I mean, why even add it? It's not like anybody's going to say, dude, I'm totally dumping Covestor because Simple Invest is,
Makes sense.
I could tweet about this crap.
I could, yes.
Now the tax dude, that's awesome. And the asset allocation, that's a big value. But I mean, is this a me too with the social features, or do you
So
really think
my
there's-
idea was more so that users actually, when I spoke to those 10 investors, they really want to know how other investors are positioning themselves as well. And really, there's no other way that I can figure out how other users are doing unless they share their portfolio with each other.
anonymized data?
It will be anonymized. The portfolios will be anonymized, but still the percentages of if you had $1,000, what's exposed to what, that's what is going to be shared. I'm not going to share, I should make that clear.
Oh, of course.
Apologize.
Yeah.
We're not going to share your actual holdings, like you
I-
make $1 million and this is what your this is. We're not going to go do that. It will be anonymous, but it gives the user an avenue to find out what the other guy is doing, and in some sense, you are getting trends on the data and saying, okay, how are investors reacting, etc. That's
Sure.
a good for the future.
OkCupid did a really good job of that, with their data.
Dating and finance, too.
Yeah,
Exactly
it's
the
the same thing.
People want money and
It's all about scoring.
Perfect. So that's how our financial projections and our financial milestones look like. We will be net income positive in 2016 with a 11.26 net income in 2021 at the modeled assumptions. And I hope I've convinced you that this is a great opportunity to invest. And we're seeking $500,000 in preferred equity for a 17% stake in the company. We'll position the company for an IPO or a liquidity acquisition at year 5 to year 10. I've modeled the year 10 liquidity exit at $232 million at a 20 PE, which gives the investor about 55% IRR, which is a good return on your investment, I hope.
So Why so few users in your first year, right? Go back to your slide just a second ago. All right, so you're looking at 100 users in your growth phase in 2013.
Yes.
Why so few?
So I've modeled it based on where my development is going to be and how hard I've seen compatible getting paid users.
And so it's taking you a long time to develop. So is this a 3-year development cycle, 2 years?
It's a 2-year development cycle. So
So-
first year is like probably 2/3 of the development, then get your beta users, qualify all that, and then in the second year build off of that and really start growing and getting.
And why does it take so long?
To be very honest, in terms of the technology that we have to do, we've got to figure out the account aggregation is easy. The tax algorithms, etc., are a little more complicated. And also the technological challenge there is as you increase accounts, it's going to start scaling exponentially. So it's going to be an n by n by n matrix. So we've got to figure out how that works and present all that. And we're at this point just 2 guys in a garage. So we're kind of putting that as an implicit scale as well.
So basically, are you saying that you can move faster if you got more capital?
If I could definitely hire another developer, I could go more faster.
And you can't hire another developer with 500K seat?
I'm hoping. I mean, I guess that's the. I cannot hire. Sorry, I didn't get your question. I apologize.
So you're saying it's only 2 of you guys in the garage,
Yes.
right? All right. So that 500K seat is going to get you an additional developer, but you still have a long timeline.
Correct. So that's another developer, and you're right. I've not. This is with the developer. If I need to hire another developer, I need to take in more money. That makes sense.
I guess what I'm trying to get to is how can you go faster?
How can I go faster?
Yeah.
I think the first year development, we would still have to figure out the kinks. So the one developer is good enough to get to that beta stage. Once we get to beta stage and figuring out, I could probably need more money at 2013 to actually jump up the 100 instead of doing 100, bump it really up because the marketing spend there, spend only about 100K. So if I increase my marketing spend about at that stage, I probably could go much faster. Now I've kind of put the marketing spend in 2014 because I've just based on, and it's just based on reading in the news and figuring out how other providers or other software people have got paid users. Now, if I did a freemium model, I probably could increase my user adoption, but I don't know if I can extract that much value at that point. At least that's the trade-off that I'm making at this early stage.
Just
And
a
I-
really,
Go ahead.
sorry,
Sorry.
go ahead. Just a really quick product question. So when I'm on your site, once you build it, and I want to rebalance my allocation, do I do it through your site or do I have to log out and log into Schwab?
You will have to log in Schwab because I will give you the transactions that you need to put in Schwab. The original idea was that we would do it for you, but the survey at least indicated that customers did not want to do that. They wanted to be in charge of when buys and sell happen. So the original idea was, hey, why don't we just automatically rebalance it for you as well?
But not automated, just not having it log into the system.
Right, it's not,
So you tell them what to do, but you do it in the system versus having to go into log into it.
Yeah, so right now it's still not in the system. They said, hey, oh, I see what you're saying. At this point, yeah, we haven't baked that, saying that you can do it within the system. That could be another product enhancement that we could make.
Will Schwab even allow that?
I didn't even know they you could
Schwab
pull the
does.
data from it.
Some providers do. For example, TD Ameritrade has an API. I can run trades on my own desktop.
E-Trade as well. But there's a couple
E-Trade
of
has
them.
as well.
Yeah.
But probably the 401k guys won't let me do it.
Yeah.
I just don't see Fidelity opening the
Yeah,
door
that's what
for
that was the big hurdle for me. Like, just it's going to be a
I
fragmented space.
don't
for it.
know. I
It
mean, I
doesn't
don't
matter.
know where Fidelity would have a
Not
problem with
doing
it
it,
though
so.
because they're making money off the fees, not really other transaction.
Yeah.
Oh, yes, I'm done with my slides. That was mine.
So, so correct me if I'm wrong. The stuff that you're doing, the algorithms, it's not rocket science, right? What's your defensible position, right? What's your barriers to entry for other folks? And
So
stuff?
the rocket science would be the tax efficiency, because that would be based on stuff that we could take tax information and make it into algorithm form. The long-term holdings, short-term holdings is an easy example. So there's a way that you can arc the watch sale rule that a lot of people don't know about. That could be coded. So there are a lot of other things there. And then the maths problem of just figuring out X accounts and how to go rebalance across those X accounts is a complicated math problem. So from a pure computer science standpoint, the algorithm just scales exponentially today if you had to do it brute force. And that's why Excel is so hard, because you're doing it brute force. So figuring out the heuristics and how to actually collapse that down into manageable compute time is going to be interesting. We have some ideas. Worst case, you can always brute force it, but you can always reduce the time as we go along. And then also the industry analytics and the country analytics. most of the, except for Morningstar does a good level of country analytics. Nobody else really does country analytics. And there's where the proprietary will come, where we'll source the data directly from certain financial sites that are open, and actually combine all that to give you equivalence portfolios, for example, saying, hey, you really have exposure in this country based on a particular fund, which a lot of people don't do.